So welcome to series webinar on water risk due diligence for private equity in context of Cape Town and future global water risks ahead. So just a word or two about the webinar logistics. We have a fairly large group joining today, so we have muted all lines. And if you do have any questions at all, please just type them into the chat box at the bottom left of your screen. We will have time for some Q&A at the end of the presentation. And if you would like to ask any questions, again, you can just type them in and I will ask on your behalf. You can also raise your hand through a little hand icon, and then I will call on you and you can unmute your phone by pressing *7. And for the webinar, we do recommend using the dial-in numbers versus the audio via the website. So again, we are excited to welcome you to this month's webinar. It's on behalf of the entire Investor Water Hub team. My name is Monica Freeman, and on behalf of Hugh Brown, Robin Miller, and my colleague Siobhan Collins, I just really want to welcome you to this series and to this particular webinar. As some of you may know, but some of you may be new to our calls, the Investor Water Hub, which is a working group of Ceres' larger investor network on climate risk and sustainability, is a group of now over 90 institutional investors that work collectively together and engage together to become more water risk aware and to really support peers. And as part of that work, we often have webinars and discussions and sort of peer learning opportunities. And before we jump into the crux of the call, I wanted to also share some upcoming events. So for those of you on the East Coast, we hope you can join us for Ceres Conference, April 24th to the 26th. For those of you in London, there is a really interesting event hosted by Environmental Finance and the London Stock Exchange on April 18th, looking at water risk opportunity and sustainability from an institutional investor perspective. So I welcome you to join Ceres and many other really interesting speakers there. And for Investor Water Hub members, we will be having our next working meeting call May 11th at 11 a.m. Eastern Standard Time. And for any of you that are on the line and want to find out more information about the working group, feel free to reach out to any of us at Ceres to find out more, or to more regularly be connected to this work, and we can certainly share upcoming events and presentations. So we'll share our contact details at the end of the call. So without further ado, I really wanted to turn things over and start looking at what institutional investors can do to become more prepared and aware of water risks, growing water risks globally. And we wanted to touch on the situation in Cape Town in particular to start us off before we go into the deeper recommendations of water risk due diligence in private equity, because we thought what was happening in Cape Town really can provide some lessons learned to the corporate institutional investor community on the importance of becoming more water aware and to become more engaged with regional water authorities and regional water resource management planning and really understanding water risks in regions that investors are putting down and investing in the long term. And ultimately, we recognize that the situation in Cape Town can have lessons learned for many other regions. And I think too, the working group of the Hub and many others also recognize that really understanding and supporting water, sustainable water resource management is fundamentally good business and good for establishing and providing for strong, resilient communities and strong, resilient economies. So without further ado, I would really like to introduce you to Dr. Manu Lal, who we're really excited and delighted to have speak on our webinar. And he's just going to give us a bit of background on some of the water risk drivers related to the Cape Town situation, but also connect the dots for us on some of the lessons learned beyond what is happening in Cape Town. And for those of you that don't know Manu Lal, he is the director of the Columbia Water Center at Columbia University. He's a world-renowned expert in statistical and numerical modeling of hydrological and climate systems, and also in water resource systems planning and management. Dr. Lal has also recently directed a 3-year study with Norges Bank Investment Management, the large Norwegian sovereign pension fund, on the quantitative water risks in mining and their financial implications. And for any of you that have not looked at some of that research and some of those findings that are starting to come out, I highly recommend you do. It's excellent and really interesting work. But without further ado, I would like to turn it over to Dr. Lal.
Thanks very much, Monica, for inviting me to talk to the group today also. I thought that I usually try to make one point in these very short conversations. So let me lay out that point, and it's a point that's a little bit broader than Cape Town. Some of you may remember that Sao Paulo was being raised as the poster child of drought impacts for cities and what kind of things happened there just a few years ago. And the situation in both of these cases, and in many of the cases where you hear about municipal water stress or drought, is generally similar. So that's what I'm trying to address with the Cape Town example. And to keep it short, I won't talk about Sao Paulo, but I'll be happy to do that if there are questions. So here in Cape Town, one of the things that you may have noticed is that right after this happened and all the talk about day zero happened, people started talking about climate changes here again. And this is an example of what goes on with a once in a 500-year drought, which clearly is unprecedented in this location. And what I want to convey with the example is that we've found a very useful bogeyman for almost anything that goes on, which is climate change. And invariably what happens is the people who are making those sort of articulations are using relatively short records the last several years, and then they claim that what you're seeing is highly unusual. Now, the argument actually is self-validating in a sense, because what they say is that because there's climate change, it's not worth looking at past data because that's not what is going to happen in the future. So let's look at the most recent period. So let's take a look from that perspective at Cape Town, and then I'll come back to reinforcing the point that I actually want to make in clear terms after you look at some of these examples. So this is a long record of annual temperature for Cape Town, and what you see is that things really warmed up in the 30s through 50s, and then they cooled down, and then they've been warming back up again. But this is not like what you see from a global warming signature when you look at the global average temperature, which has generally been going up, although with periods of hiatus even recently. So that's the first look. And the point I'm making is that you see much variability at decadal timescales, but not really a dramatic long-term warming trend. And in our context, the warming locally, if it existed, would be relevant in the sense that evapotranspiration from vegetation, from crops and lakes would increase dramatically, and that would reduce the amount of water available for human consumption. And that's the story that we were getting pitched for California's drought of 5 years, where the rainfall was deficit, but the temperature warming led to a greater decrease in available water. So that's the first look. Let's take the second look. And this is annual rainfall in Cape Town, reconstructed again from a long record going back to 1851. And this is where I want to emphasize that several of the people who were talking about how significant the anomaly was of the recent drought, were focusing really on the last 30 years. So if you look at the last 30 years of data, so roughly 1980s to now, it looks like the last value that you see is well below that. But if you go back and look all the way back through, you see that the recent years are really not that out of the ordinary. And in fact, if you look in the 1940s, that looks like a persistent sort of drought back there. So point being reinforced here is that even in terms of total water availability on an annual renewable basis, you could get easily fooled by looking at the downward trend that is evident in the 1980s through now. And so there you do see that things are declining, and somebody could very well say this is climate change induced, but if you look back, maybe this doesn't look so strange. So what I did is, on this graph, is I was able to find documents that were publicly available from the Cape Town utility and the South African Department of Water Resources, which provided me information as to how much storage the entire system of dams that supplies Cape Town is designed for, how much water comes into that on an annual renewable basis, or actually even monthly, how much is being delivered, and what has changed over time. And I was able to relate the annual rainfall and monthly rainfall data that I had been able to scare up to the inflows to those dams, and hence reconstruct this graph. And what this graph is showing you in the red line is the total storage capacity of the system. And what it is showing you in the blue line is the cumulative storage requirement as I work my way through 1851 to now, using the estimated flows that we would have had during that entire period and the current consumption levels that they have. So what I want to draw your attention to is the period between 1935 and 1940, where this thing goes crazy, the blue line, and crosses the red line. And that crossing shows you that the total storage requirement, because of that persistent drought that I was kind of showing you on the last picture, which is right here, the dry period just before 1940 that you see there. During that period, essentially the total storage requirement would have exceeded the total storage that has been built. Now keep in mind that what we are doing here is a game where the total storage available today was actually constructed in the 1980s. It did not exist in the 1940s. And the demand that we are using is the demand of the most recent period that the system is contracted for. And what we are computing is whether or not the storage available, given the time sequence of flows coming into the system, would have been adequate. And then you see the same sort of thing happens in the late 1960s, and then of course it happens now. So what this translates into is that there would be roughly 3 time periods in the last 150 years where the storage that currently exists would have been inadequate to meet the current demand. Translating that in another way, the drought that we have recently seen is more like a 1 in a 50-year drought rather than a 1 in a 500-year drought, as has been advertised. And while climate change is real and it's going on, that is not really what we should pin the blame on for this particular setting. So to summarize here, one of the things that I didn't mention yet that happened was, over the last 3 to 5 years, the government of South Africa decided to invest more in irrigated agriculture and started actually mandating increased releases from the same reservoirs for agriculture in the area. And one of the things that now allowed a delay of the day zero, which was being projected for April and then for May, was that they were able to prevail on the agriculturalists to actually give back some of those the water in the reservoir that was allocated for their use back for Cape Town. And then, of course, there was a rainfall event. So the summary of this at this point is that I think what we are seeing is that the rhetoric that comes out points to climate risk. It is indeed climate risk, but it is not often climate change risk. And that climate risk refers to supply and sometimes to increasing demand from natural sources, natural vegetation, for example, from evapotranspiration. But by and large, in the Sao Paulo example, as well as in the Cape Town example, it was actions taken by the governments that led to an exacerbation of that risk. and in different ways, of course, and went unnoticed until the problem became acute. In Sao Paulo, as in Cape Town, until they started hitting the day zero situation, they were not doing significant attempts to reduce the water usage and conserve, or to recycle, or to bring in additional sources through desalination until it was very late. So this is really the kind of governance risk that is manifest more often, and it occurs triggered by climate risk, and that's, I guess, the framing of the problem that one needs to understand and map into a financial risk analysis if you're looking at the kind of activities in that location that are likely to be adversely affected by water shortages, whether these are economic activities or disease-inducing activities, which then have a projection onto economic activity. So to close this out, I thought I wanted to show you, we have done an analysis at a global scale. So we have done this in various ways, and this is one of those analyses. Others relate to agricultural productivity and mining productivity and other economic productivity. Looking at it from a globalization perspective, and this particular analysis fits with the current conversation. And we took the 100 largest cities in the world. And what we did was that we said, let's suppose that we are interested in a relatively severe drought, a drought that would last 1 full year. So not a multi-year drought at this stage, for at least for this example that I'm showing you, but a drought that would persist for a full year and would have an average probability of occurrence, drought as severe as that or worse, of 1 over 10% in a given year. Or if you're used to it, this would be like a 10-year flood event, except it's a drought. And what we were interested in was seeing what is the global exposure to such droughts based on the historical record. And once again, the point I'm trying to emphasize is that we seem to be overlooking as a society exposure that we actually have experienced already, which might recur with or without climate change. So the way this analysis is then done is that for every single city in every single year, we check whether or not a 10-year return period drought has happened in that particular calendar year historically. We weight it by the current population of that city, and then we form an index which is normalized by the total population of the 100 cities and hence reflects the aggregate percentage of the population of the 100 largest cities in the world that in a given year got affected by a 10-year drought or larger. So on average, you would expect this to be about 10% of the population being exposed if all the cities had roughly the same population and were getting roughly the same random exposure. And the point of this analysis is that we are very concerned that given things such as El Nino, we could have a major hit in many, many cities in exactly the same calendar year. And so if you had a multinational corporation with operations or sourcing across many of these cities, they would be disproportionately affected. So what I want to point you to is the graph starts at the year 1900 and goes through to now. And roughly in the first quadrant or second quadrant that you see, there is 1 year in which around 30% of the aggregate population of the world, of the largest 100 cities, experiences a drought in the same year. That's 1921, and that's a very strong El Nino year. In the more recent period, the corresponding high spot is 1997, which was also a significant El Nino year. Otherwise, the interesting thing here is the pronounced decadal variability that's shown by the red curve, and the blue line showing a long-term 85-year moving average, which shows that generally the percentage of the population getting exposed has been going down, which says that possibly some of the largest cities that are in this particular sample have not recently gotten hit with a drought. So to conclude, the point I wanted to emphasize was that climate risk is important for water. To better appreciate that risk, we need to look at the longest possible records available to us. These can extend beyond what I showed you here, beyond 1851 to now. There are paleoclimate records that actually go back 500 years, and we've been monitoring them for risk analysis. And it's not useful to look at the last few years because actually the trends are very modest to date in climate change. So if you're looking at the next 10 or 15 years, the likelihood of seeing a 1921 style drought or something that has happened in the 1930s in the United States or 1940s, as we saw in Cape Town, is quite real, and it's not getting priced into the risk analysis. But then the climate risk becomes manifest as a much more serious economic and financial risk and a population risk because of the lack of proper management of the water resources by these utilities, and also the interference by national and state governments in changing a trajectory that someone may be trying to follow otherwise. The last point that I made refers to the fact that we could look at multiple cities. It doesn't have to be the 100 largest cities in the world, but let's say Apple manufacturing is and sourcing to Tier 1 and Tier 2 suppliers was looking at a specific set of locations. We can easily do an influence diagram or a risk analysis associated with those, both on the side of droughts and floods, and this is some of the kind of stuff we have been doing. So I'll stop with that, and I'll be happy to answer questions at any point in the program that there's allowance for that.
So thank you, Dr. Lal. We'll have some time for questions at the end. And given that you're really highlighting that these risks can be quite systemic and reach beyond Cape Town, but certainly there's lessons to be learned, especially around the need to analyze the strength of water stewardship and water governance in a region. So what can institutional investors do? Institutional investors have many things on their plate, including looking at economic, political, fundamental analysis of many companies and regions. But what we offer is that there are certainly resources available, and one is the newly launched Investor Water Toolkit, which series recently launched in collaboration with over 40 institutional investors to really assist institutional investors understand and improve their research processes to understand water and ESG risks. So it's everything from, how do you establish priorities related to water as an institution? How do you improve by-cell analysis? How do you improve portfolio aggregate characterization and analysis and asset class analysis, to also improving corporate engagement or engagement with municipalities and water utilities as well. And I'm excited to say that we've also just this week launched the Investor Water Toolkit tear sheet, which is on our website, which is a 4-page summary of the highlights of the many recommendations from series and these 40 investors as well. So one of the pieces of the toolkit that I was particularly excited about was the chapter on private equity due diligence, and specifically private equity water risk due diligence, a decision tree that was created by the subgroup of 4 investors working with us on this topic. And so we really wanted to bring to investors in the private equity asset class some main recommendations on how to look and do better water risk due diligence. And part of that group was Mark Robert of Water Asset Management, Jason Scott of Encourage Capital, Sue Yang of Macquarie Infrastructure Investments, and also Jessica Hahn of the University of California Regent. So just want to acknowledge and thank those participants for their over a year-long engagement with us on this project and the many hours they contributed to really trying to help peers understand these risks. And I'm delighted to say that we do have Mark and Jason, who are going to be talking about the private equity water due diligence for us and going into more detail. So just to introduce you, Mark is Chief Operating Officer at Water Asset Management, and Water Asset Management is an investment firm focused on trying to solve water quality and quantity issues across the globe. Prior to Water Asset Management, Mr. Robert worked at Morgan Stanley as head of U.S. equity research and sales, along with many decades of experience in investment fund management. Jason Scott is co-managing partner of the board of directors of Encourage Capital, and Encourage Capital seeks to change the way investment capital is used to solve critical environmental and social problems. And prior to Encourage, Jason was also the first employee and founding director of the investment firm Generation Investment Management, which was co-founded by David Blood and former Vice President Al Gore. So we're delighted to have both of these contributors on board to explain the private equity water risk due diligence decision tree. So checking in, Jason and Mark, turning it over to you.
Okay. Well, this is Mark. Jason, you there? I'll go ahead. I think as we highlighted, and obviously Professor Lal indicated that climate change is one of the things that exacerbating water risks, both from a flooding and a drought perspective. But in essence, water is an element that you need to take into account in making any investment decision where you're operating in an area that might have water stress or water quality issues, or where you have a population that does not have access to clean and safe water. So those are just sort of broad lenses to take into account as you think about investing, and not dissimilar from many of the other risks you have in any portfolio or individual investment. I think one of the things that is particular to water is that it tends to be hidden. In other words, the assets themselves lie underground, so many of the issues are not necessarily well understood or visible. The second thing is that there are solutions to all of these problems, and the question is, it requires a fair amount of planning, and it requires a fair amount of transparency. And the water industry does not necessarily lend itself to transparency. Many of the issues or many of the owners of the assets are government, and government has many tasks that they have to deal with, and unfortunately water tends to fall relatively low on the list until there actually is a problem. And unfortunately you need to have a plan, and you need to anticipate well in advance. Much as Dr. Lau pointed out that Cape Town has dealt with droughts in the past, this should not be a new element to anybody who is living in the Cape Town area. The question is, what is the appropriate response? And as an investor new to the area, how does one gauge that response? So, my takeaway is these are solvable. You have to anticipate them. You have to know what questions to ask, and you cannot assume that you're getting necessarily the full answer. So you have to do your diligence and homework independently. So, and that requires, understanding, is this a water-prone area for either a flooding risk? What is the growth demand for water, and is it met with adequate forecasts? How good is the infrastructure? Does the infrastructure, has it been maintained in a logical way? The other thing is, and as Dr. Lau pointed out, water is interconnected. So a decision by the government to increase irrigation had a knock-on effect on the municipal supplies. It might strike people as crazy, but only recently has California, which has been struggling with drought and is the fifth largest economy in the world, has only recently made the connection between water beneath the surface and surface water. So there are many areas where you need to know what questions to ask, and who to ask them to. And this toolkit was an effort to do that. So I will point out that just on the charts here, we feel that you need to understand the region in which you're operating in, and you need obviously to understand who has been undertaking the physical planning and assessment of the risks. The one thing that I will say is a very hopeful message is, water is a very local phenomenon, so one can isolate oneself from some of these issues. And so it's very much something which you need to push rating agencies to be more transparent about. You need to push local governments to be more transparent about. You need to push corporates to be more transparent about what is their water usage, what are their water treatment risks, how does their workforce get their water, and are they in a larger watershed which has, in essence, there are a lot of questions you need to ask. And the good thing is many of these problems can be anticipated. They don't necessarily have to crop up suddenly. And one of the things I would encourage you to ask, and I have as an example, if we go to the slide which is after the regional, sort of the San Diego slide, which I think is, there we go. So here is an example of a city which could very well have been similar to Cape Town or Sao Paulo. This is San Diego, and San Diego is a government. The system is owned by the city of San Diego, and what they have done here, and what we've shown through this chart that the city, the county water authority makes available, is they have actively gone and diversified their water supplies. So you see that in 1991, they essentially were 95% captive to the Metropolitan Water District, which is the wholesale supplier of water for Southern California. And because San Diego found itself geographically at the end of the pipe, so to speak, because all the water in California flows from north to south, they found them, one, at risk because they only had one supplier, two, at risk because everybody above them on that pipe had a call on the water. And so what they have done by the end of 2020, we think that they will have diversified their water into a number of different suppliers. Obviously, you can see that the entire pie has grown. But ultimately, they have gone to work with agricultural users to figure out ways in which they can share water. And this is the signs to us of a responsible municipal area, and one that would be, if you're in a drought-prone area, you'd like to see these kinds of measures being taken. And most importantly, it also shows that water is very interconnected. So they're using water from their own systems. They're reusing it. They're partnering with agriculture to create a more flexible system. And for us, this is a hopeful message because many of these problems can be addressed. It does require capital and planning, though.
I think one thing that I did want to highlight that was developed with the decision tree was, the reason it is a decision tree is that you don't necessarily have to tackle all of the issues up front. Water, as you know, is complicated. There are regional. There's different, you don't have to look at all the questions at the same time. So there's regulatory, physical, social elements. And I think what was really telling to me when we were doing this work is, first really, before you look at the actual project, be it a data center, a manufacturing plant that the private equity investor is interested, be it agriculture land, be it, a food company that's very dependent on agriculture, or other industry, is to really look first at the regional context. So really understanding as Mark mentioned, the physical risks related to, supply diversity, but also regulatory water risks as well, but also in conjunction stakeholder risks. So I think Jason was going to speak to this a little bit, was related to really doing sound regulatory and stakeholder analysis. And the stakeholders really, understand the key stakeholders in a region. What are the existing water issues? What are some possible future conflicts related to water? Are there groups or stakeholders that are unhappy about water issues, either quantity or quality and water degradation? And conduct some worst case scenario analysis. If stakeholders really push back, if they if they really see, the investment coming in as a threat to water resources, do you face, real problems in the future? Do you face also reputational risk? And also, it is the hardest risk to manage, and it's important to go and talk to these groups and really try to understand, their concerns in the region as well. And I think also part of the sort of regional due diligence was to really understand, as you mentioned, and Dr. Lal, just how well water is managed in a region, and understanding not only current but also future, risk development. So in many regions and in many cities, there's, incredible projections for population growth, competing demands on water. But there, you can certainly look at also how well, the financial health of local water authorities, and how water is actually owned and priced and allocated amongst end users. And that really does help mitigate some of the social conflicts as well. And are there vulnerable communities? Are there vulnerable environmental or cultural regions at risk as well that can lead, to conflicts in the future? So really the importance of understanding those risks.
Make the point. Obviously, there's a lot to tackle here. The most important thing is these questions need to be asked because it's a major input, it's a major output of any industrial process. It's also a major reputational risk if you are operating in a way which can, somehow damage this very difficult to replicate supply. The other thing that's important is you need to think like water. So water does not necessarily have boundaries that are constrained by city limits or state lines. So you have to almost examine the watershed in which whatever your investment might find itself in and say, are there other issues within the watershed that could have an impact on me? And the good thing is this is all fairly physical. It's easy to measure. You just have to know what questions you have to ask. And I think there's also you can diversify away your risks if you're operating in a water-stressed area. Perhaps you should think about diversifying into some less water-stressed areas. But anyway, happy to turn it over to questions, or Monica, over to you.
Yeah, I think one thing we did in the water risk due diligence as well, Mark, as you may remember. So what if you do find there are problems?
Right.
If there are physical constraints, it doesn't necessarily. It's a red flag, or if there are community concerns, it's a red flag. But so how do you instead of walking away, what can you do to mitigate or help, get those risks lessened and get the project back on track? So maybe if you could cover some of those ideas,
Mark?
Mark?
It depends on what the situation is. But I think from, obviously if you're operating in a community that is net short water, drought constrained, similar to Cape Town or to Sao Paulo, you need to, one, identify that you have alternative sources of supply. During the Sao Paulo drought, we were surprised at how many water-intensive industries had no awareness that the city was so close to running out of water, and two, had no backup plan. So the simple thing is, don't rely only on the system. Make sure that if your water is, water is a major input to your product or services, that you have a backup plan. So that's point one. Point two, the biggest risk is, that you misuse that water. So make sure that you treat water as well as possible, particularly in how you deal with wastewater, and try and reuse as much water as possible and make sure that the system is as water efficient as possible. And it's only by being a good steward of water that you can necessarily, obviously obviate any risk, but also hold yourself up as accountable when other people are less accountable. I'd say three, and probably the most important, is be transparent with the city or the providers of the water in which, or the region in which you're operating in, to push them to divulge their capital spending programs, their diversification plans. And we keep coming back to it. The most important thing about water is transparency. Transparency about the costs, transparency about the status of the system and the infrastructure, the transparency of the availability, and the transparency of the needs. So, there are, the good thing is that you can mitigate most of these things, and I think, one of the exercises that I participated in with an owner of a large manufacturing base was they realized that they were operating not only in they were growing crops in a water stressed area, but all their manufacturing was also in the very same water stressed area. So I think the other thing you can do is diversify and make it part of the questions you ask.
So I remember, in the resource and the decision tree, it's sort of easier said than done, and as you mentioned, Mark, it's complicated. But how do you practically, and I'm actually going to turn this over to Jason, who I hope we have, how do you practically go about doing that due diligence? Who do you talk to? Do you hire, hydrologists on the ground, or,
Yeah, I think first off, there's a lot of available data to show you the region in which you're operating in from a water stress indicator, and that you can get, both meteorological and hydrological studies that would give you a sense. And then I think you look at the demographics, what's the population growth, and then you probably want to meet with your suppliers and figure out how transparent they've been about their capital allocation process and how good a supply their supply really is. So I think it's there's a fair amount of basic fact finding that you can do, and then obviously if you're operating in a regulated system where it's surprising to many people that, for example, in the United States, 85% of the water is delivered by municipal systems which are not regulated. So there is no regulator to talk to, but in many parts of the world where there is a water system, there is a regulator. So talk to the regulator. Find out how the system has been managed and invested in.
Yay.
Hey. Mark's done a great job. So maybe I'll just add one more thing because I know you want to get to Q&A. I think if you go back one slide, I think is the one I wanted to mention something about, which is just I think our approach to water has very much been a stakeholder-driven approach. I think Mark has hit all the really key points on the head, but in the end, as an investor, especially as a long-term investor, if your economic goals are not aligned with the key stakeholders in the region, you probably will have trouble getting liquidity around your investment from a financial point of view, and you probably will have trouble achieving the other goals you might want to achieve from a mission or an impact perspective. And so whether it's industrial use or farmers, whether it's the government and environmental use, figuring out who the partners on the ground are they irrigation districts, municipal water authorities, and NGOs. The conservation NGO community is very diverse. They're not always aligned with each other. So they're often internal conflicts, but understanding and mapping out where each stakeholder is a crucial part before you put money to work. Even if it looks good at the beginning, if you don't know where all those stakeholders sit and where they might sit at the end of a project when you're trying to exit, you could have a really bad outcome. And so it's that upfront understanding of and mapping of the stakeholders is where we start.
Thank you, Jason. So excited to have you on board and really hammering in that key point. So we really talked a lot about the regional contextual analysis as being where you really start, and maybe just spending a couple quick minutes on the lower part of the decision tree, which is really around the project. And if you can just highlight perhaps a few key things, once an investor determines, the regulatory stakeholder physical elements are manageable and to really, move ahead potentially with the project, what are the due diligence related to the project itself? And Mark, I always love the insights around fire suppression, if you can throw that in there as well.
I think ultimately water has a lot of elements which, when you break down the economic elements of the water consumer, some people have been cross-subsidizing others, and I think understanding the the community, how the water is consumed, is it being overly subsidized by one element? Is there pricing which is not? I get back to this transparency element. The pricing on water is not always that transparent. In many cases, it's being sold at levels below the real truly baked-in cost to deliver it. And so I think you need to understand where you're operating and who those consumers are. And so the example I always give, which Monica referred to, is there's a lot of water that is a lot of municipal water systems are built for fire suppression. The water is the system is pressurized to make sure that we can deliver water to the entire community, and then sometimes it's overbuilt, and yet that water is never really turned on. Yet if it weren't available, the insurance premiums that these individuals pay would be far higher. So as in many of these things, we have to figure out, are the externalities priced in? So in the case of water, that can be its role in fire suppression. It could be its role in providing, wastewater is obviously, it's a large health service. To the extent you didn't have it, you would have spread of disease. The other thing that is another area is stormwater, which touches on kind of the episodic nature of climate change-driven water events. But stormwater is a huge problem. But unfortunately, it only comes every so often. And how do you pay for that? And so if you tied that to property values or flood insurance risk premiums. So I think it's really thinking about the value at the regional consumer level of water. Is it being fully priced in? And then where does your venture sit in that?
I guess, Mark, what I would add is just that I think, we have already worked on some transactions where, pricing stormwater has actually been a key driver of potential returns. And, both us and some of our partners, we're part of something called the Liquid Assets Project. It's been funded by a number of foundations and family offices. We've produced some reports with Trout Unlimited, EDF, TNC, and also the water law firm Culp & Kelly that look at other models of financing investments in water where there's either a pay-for-performance element around stormwater, around fire suppression, or other kinds of crop conversion or changes in land use that have other benefits. What I would say is that, the size and scale of the transactions you can do that are really driven by those alternative values right now are fairly small in and of themselves, but they can be a really interesting creator of alpha if you can, with a more kind of mainstream traditional real assets investment in land and water, find a way to monetize those alternative values. And there are increasingly ways you can do that. So, as a pure investment, those alternative mechanisms, monetization mechanisms are small, but now I think they'll get much bigger. But right now, it can be a real generator of alpha. And so it's a really interesting thing to look at when you're trying to underwrite a deal. Is there some other way you can monetize these benefits? Is there some stakeholder who's willing to pay for the benefit?
Great. Thank you, Jason. And I think, certainly with the decision tree, I love that you've left it off on sort of the upside to really understanding these issues. And there are a number of ideas of, once you have decided to invest in an area, there are incredible opportunities as well, as you mentioned, and we certainly list a few more in the resource guide around, by being more water aware and engaged, there can be value creation, which I think is really exciting. So I do want to leave a few minutes for Q&A. We have a couple of questions that have come in. The first, I think, is for Dr. Lal, is around the water source. Is that surface water only in your data, or does that also include, or is there also groundwater? And what role do population growth and water service privatization have in the South Africa example, if you know?
So I can give partial answers to it. Thanks for the question. What I used was surface water primarily, because one of the things I found was that their groundwater sources were either stretched or highly polluted, and hence they did not constitute a major fraction of their current use pattern, especially for the city. The second part of your question was to what extent are private players entering that market, and I don't know the answer to that, except for the fact that in the recent period, quite a few private actors did try to bring in emergency water supply systems into the area, and these were either barge-based or platform-based water treatment systems for desalination or wastewater reuse.
So a second question that has come in related to South Africa that came during the registration was the city and mayor corporates in Cape Town struggle to shift gears fast enough from their narrow areas of economic interest to a whole economy, whole society response. How do you think the financial sector, particularly insurers and investors, could have driven a better collective response to this crisis? And I would offer, Jason or Mark, if you want to help answer this question as well, feel free.
Yeah, this is Mark. I'll step in. Look, I've been talking to people. This issue in South Africa is not a new issue. There are large industrial interests. So there's a lot of oil and gas interest in South Africa that is very aware of water as a sensitive topic, that they need to manage their water as an input to their industrial operations for oil and gas. So I think what I would have said is, hold people accountable to an actual plan that can, provide for this kind of eventuality. So it was a whole host of situation. This is all risk assessment. How do you make the governments aware that they need to bake this into their risk assessment? So I would say the rating agencies, I would say investors in South African debt need to be aware of this, and the local corporates need to ask the question because they're operating in this environment, and quite frankly, it's a difficult place to operate. And so get back to my transparency, but the rating agencies, I think, do have a lot to play in terms of upping their game and putting a set of water quality, availability, and sustainability questions into their deck.
Great. And I don't want to put any of our guests on the spot, but certainly I know we have, and we're delighted to have a couple folks from WWF South Africa, and just wanted to offer, if you wanted Christine to jump in with any additional comments as well, that would help our audience understand the situation. Feel free, but no pressure if you don't want to.
Hi, Monica. Yes, Christine here. Can you hear me?
Yes, we can. Thank you.
Okay, great. There were just a couple of points that I wanted to pick up on, and thanks very much to the speakers for their insights and overview. I think the issue around deliberating whether the current drought that we're in is a long overdue drought that is aligned with our historical trends, or is a foretaste of what's to come with climate change, has almost been kind of rendered redundant because the predictions for climate change for the Western Cape in particular are that we are going to be experiencing much drier conditions. So how that's influenced what's been invested in, particularly by private businesses and even private households, is that knowing that what we're experiencing now is likely to be our experience for the very long haul, in other words, for the sort of 20, 30-year time horizon, it means that whatever we're investing in now, particularly in terms of diversifying and decentralizing water sources, is going to be a worthwhile investment, particularly for business. So I think that there's a kind of it's worth noting that we face a range of water risks, but when the water risks that we're currently exposed to are very strongly aligned to long-term predictions from the best available science, then that often opens up a whole new avenue for investment. And I think another thing that's worth highlighting is that a lot of the diversification in terms of water supplies that we've experienced during the 3-year so far Cape drought has happened at a sub-municipal level. So that's happened mainly with private businesses, agriculture as well, and households. Households essentially getting off mains. And that's had a huge influence on the water sector in the Cape. It's also often offered up a lot of opportunities for new water technologies to come to the fore. And it's challenging our current regulatory environment that is very much geared to a water supply dominated by municipalities as single source water providers. So we've seen that the pace of adaptation has been much faster off mains than it has on mains. And at the household and business level, we've been able to do things differently and adapt to what we're calling a new normal much more quickly. And those questions can also be quite useful, I think, in terms of investors thinking about the ability of companies to go their own way, but very much embedded in this kind of stakeholder. We've heard the speakers talking about how important that stakeholder approach is, because you're not going to remain water secure in isolation. So those are just a couple of comments that I wanted to add. Thanks, Monica.
And thank you, Christine. So that was Christine Colvin of the Freshwater Program at WWF South Africa. So really appreciate you leaping in and for all the good work you do there. And so I do want to take time to thank all our speakers, Jason, Mark, Upmanu, for all your insights, and I think really highlighting the importance of the corporate-private investor community as important stakeholders in really helping understand water risk, but more just the opportunities and the value creation that is available and is available to all, and going forward on these issues. And so it really can create a lot of positive momentum, financial, but also in terms of community and economic stability. So again, if you want more details, please do look at the Investor Water Toolkit on the series website for more details on some of the recommendations, and feel free to reach out to any of us for more information. Thank you again to everyone.
Bye.